Talk about breaker block at the last video. In this particular video, we want to look into what we know as a mitigation block. What is a mitigation block? What is a mitigation block? When you hear the word mitigation block, what does it mean? I actually would have liked to use a picture to explain this, but I think it would be wise for me to use a video. So that's why I'm actually coming to a live chat so we could see how it is. Now, a simple definition of a mitigation block is in an order flow. When I say order flow, I'm talking about market trend. Don't be confused. In an order flow or in a market trend, now the market fails to produce what it was supposed to produce. Let's take for example, this is a downtrend. So in a downtrend, what we are expecting is a higher high and a higher low. What we are expecting is very simple. Either we have a higher high. Okay, we have in a downtrend we have a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So that's what should be printed. That's what makes a downtrend. In an uptrend, the other hand, what we are expecting to see is to see something like a lower high, a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now I want you to see, try and notice something, that something is missing here. Something is failing to print at this particular point. Let me use a thick color so you can see. Now we have a higher high, higher low, higher high, higher low. Supposed to have a higher high before a higher low, but did you notice that we did not have that higher high at this particular point? That become a mitigation block, giving us a signal that when price return to this area, price will definitely react to feel this place. We would have gotten a higher high. Let me clear it again so you can see. Watch what I'm going to do. Watch the way I'm going to mark. We have a higher high, higher low, higher high, higher low. Impulse correction, impulse correction. So this is a higher low. So we are expecting to have a higher high here, so we could have a higher low, but we failed to have that higher high. It was just on a straight line like this till this particular place. So the market failed to print a higher high and a higher low. It went like that till this particular place. Now what this place is actually signaling is, what a mitigation block is signaling is, it is a possible reversal that is coming. And obviously you see after this, after management and management, there was a reversal. So a mitigation block is a price action in an order flow or on the chart where price failed to produce what it was supposed to produce, where price failed to print what it was supposed to print. Now a mitigation block actually gives two signals. So it is very, very important that as a trader you need to know, you need to understand. First signal that a mitigation block is actually providing is that once you see this, that this is supposed to give us a higher high and a higher low, but it fails to print that, and it was just going straight, just the way you can see like this. Is giving us a signal that there's a possible reversal on the way. That's the first thing that it's telling us. And it's also telling us that whenever price gets to this part, price will definitely react. And that's why when you see price coming to this area here, like between this area, you notice what price did here. Now what price was expecting to do in this area, it has to find a way and print it here. That is it. Sometimes price can, once it gets here, it sends up. Or did you just notice what happened here, that what is here is not here? Do you understand? So this is actually what we know as a mitigation block. It is an area on the chart where price failed to print what it was supposed to print. Now it is also an area where institutions withdrew their money, that they're taking their profit. Yes. So at this point, what actually happened here is that when the market get to this point, institutions started taking their profit. It was just the impact of the retail trader that were in the market and few institutions that moved this market to this place, and possibly the market reverse. I've said it again for clarity's sake. A mitigation block is an area in which institutions began to take their profits. So since institutions have begun taking their profit, price can no longer print higher high, higher low, higher high, higher low as it was, because the institution that were pushing the market have begun to take their profits. You get the message from that angle. That's exactly what happened here. Just if we should take this further, you can see that here the market was actually printing a clear uptrend, higher high, higher low, higher high, higher low, higher high, higher low. Now it is supposed to be a higher high clearly before a higher low, but we did not have. Instead of that, the market just went straight to this point. So this mix up here is a signal that there's a possible reversal that is going to happen very soon. Although we do not know the exact place, is a possible reversal, because when the institution that we're pushing the market have withdrawn their money now, the market is almost finishing, the market is almost closing, and that is it. So you can see there. So that is, mind you, everything in forex is on speculation, is not 100%, but that's the signal. So let me say it again. A mitigation block is an area in an order flow or on the charts where institutions began taking their profits. That's it. And market failed to print what it was supposed to print. If it is an uptrend, market failed to print a high in an uptrend, that is a higher high, or failed to print a lower low in a downtrend. This is what we know as a mitigation block. And the advantage of this, especially to retail traders like us, is that it sends a signal to us that there is a possible reversal. So if you want to buy, be careful. If it's in an uptrend, you were buying, be careful. Or if it's time for you to start taking your profit, rather than you expecting that this price will still continue like this. Once you observe this, maybe you might start taking your profit. You might find a way and close your trade somewhere here, rather than expecting that the price will go here. Now the price drop. Or it also gives us a signal that by the time we detect that, okay, there's a mitigation block somewhere here, and at this point price start dancing skelewu, why price is dancing whatever makosa the price is dancing, it is giving you a signal that take profit to. This sign you're seeing here is telling you take profit to. There is a high tendency of reversal. There's a high tendency of reversal. So like I said earlier, everything in trading is based on speculation. It is not 100% certain that that's what it's going to be or that's not what it's going to be. So it is now left for you and I to use our IQ, use our head and understand it. So that is it. It also tells us that when price reverses to this particular area, price will definitely react to what he did not do here. Now pay attention to this. These also serve as an order block. Yes, it serves as an order block. This particular point where price was not able to print what it was supposed to print serve as an order block for this price that is coming like this. So when price get to this part, it will send the energy to fill the gap that it was unable to fill before. Yes, now the gap that it was unable to fill when the price was going like this, supposed to have printed that higher high. Once it gets here, it will now control the energy as an order block to generate traffic, to do something here in order to fill the leftover space that was here. I hope it's clear. I hope you're learning something. I hope it's clear. If you're getting value, do well to subscribe to this channel and turn on the notification bell. Stay tuned because this channel have been dedicated for trainings like this. No hype, but pure training in order to help you become a profitable trader. So kindly subscribe now and see you in the next video. So that is what we know as a mitigation block, area that price fell to print what it was supposed to print, and is also a possible reversal signal to retail traders, telling us that institutions have begun taking their profits. Bye bye for now.